If you clicked on this video, high chances that you're not doing very good when it comes to trading financial markets, or you're doing all right, but like you're not where you want to be when it comes to like gaining money, income, all of that stuff, and you're thinking about this trading stuff, like, is it gonna take me far? Should I drop trading? Should I keep trading? You don't really understand what's going on and where are you headed with this new hobby that you picked up a couple years ago or recently. Doesn't really matter. So today's video is going to be like a very informative one, and I'm going to explain exactly why the majority of traders do not perform as much as they want to be. Because we all look at the internet and we see people flashing insane P&Ls, 20k a month, 20k trades, and we all wish to be that one person that's making it from trading financial markets. And as you guys can see, like, let me show you, for example, you always see like $1 million from trading, insane P&Ls, etc., etc. And so the main problem with trading financial markets is you as a person. Actually, the human being by design is a losing trader, and the reason that's the case is because we have this built-in feature called pattern recognition. So pattern recognition allows us to navigate day-to-day life. For example, back in the day, in the caveman days, if a person saw, like, they didn't know what lions do, etc. So like a random person will discover a lion, for example, or discover a new animal, and he will just like walk up to it and he will end up dying. Like, the lion obviously will kill the human being, but his friend or his buddy will see that his friend got murdered by this lion, and he will learn from that incident and not approach lions anymore, which became pattern recognition. It caused the human being to evolve and to survive these harsh living environments. So pattern recognition is built in by nature for us as a safety feature. You know to not touch fire, because last time you touched fire you got burnt by it, right? That's how it works. So there is a pattern. Every time I put my hand on top of fire, I get burnt, I get scars. Therefore, I must stay away from fire. That's exactly how pattern recognition is. So human pattern recognition is a fundamental cognitive process that enables individuals to identify and understand recurring structures and sequences in information from their environment, such as visual, auditory, and abstract data. So, simply put, you can apply this to trading. A lot of traders, they trade patterns. Even if you trade any strategy that you find on the internet, by the way, is built on patterns. Like, I can click here, for example, on this random reel. It's gonna be him. It's gonna be this person, TGR, for example.
Welcome to the intraday forex strategy that actually was the first strategy that turned me profitable. Essentially, the theory goes and says session highs and lows will be respected or played off of by following sessions.
Exactly. He's looking at a pattern. This is a pattern that he noticed. Session highs and lows will be played off, whatever, right? Swept, whatever the concept is. But I'm not hating on the concept, I'm not hating on the person, I'm just telling you like exactly how humans are. So this person found a pattern and he's exploiting it. The problem with this thinking, it's not necessarily wrong, it's just, if you don't have the data to back it up in a quantitative type of way, where you can simulate the equity, you can simulate the drawdown, you can simulate where you can simulate the drawdown, you can simulate the equity, you have performance metrics, KPIs, etc. And you know, like, if this strategy is profitable on a long period of trades, you really are just doing pure pattern recognition, human pattern recognition. We need system pattern recognition, where this pattern can be stress tested and we can figure out if it's actually profitable or we're just like hallucinating. So for example, this person
Where is the
found this pattern, right? And you as a person, like as a beginner trader or even an experienced trader, will come, you will see some of these videos, for example, and you will try to replicate this style of trading or these patterns or this strategy, for example. This is why I'm against selling trading strategies, by the way. You will try to replicate this trading strategy and you will win sometimes. I'm not saying you're gonna lose all of your money, but like over an extended period of time, it's gonna look ugly. And this is why you're not where you want to be in trading, because this is the next step. This is once you understand this as a trader, you will evolve and just like actually get over this pit hole you're in. So let's continue. By the way, as I said before, human pattern recognition, right, causes people to find patterns and to patterns in day-to-day life. We can use this in financial markets as well. You want to make money, you want to buy here, you want to sell here. For example, you just come here and you're like, damn bro, like look at this, if I do this and boom, price came in, respected this area, for example, this, I don't know, like any trading strategy that is, respected and it went down. So every time this happens, I'm gonna sell. And you try to do it again, maybe you win here, like look here you won, let's just say here you won like 4 RR, here you want 2 RR, you're like damn, this is an insane strategy, like look at this. But like you try to do it again and boom, you get blown the fuck up. And maybe like it happens again somewhere in the future, right? Here you try to do it again, you're like okay, when price goes to this area, for example, I'm gonna try to sell, right? For example, right, I'm just simulating price is gonna go here and go down. This is just an example of a trading strategy. For example, supply and demand, right? Something like this. But what you don't understand is if you don't take this strategy and code it into a system where it tells you exactly how we performed in the past, for example, 20 years, 5 years, and you forward test it. You test it on live market conditions, on a demo account, whatever. To actually stress test the strategy, you're just hallucinating, because price can just break through this. And if this happens to you just a couple times, if you don't respect risk management or whatever, let's just say it happens to you 15 times on a row, which is very probable, by the way, very probable, you are going to be in a serious drawdown, and that's gonna mentally affect you to take stupid trades, maybe like break your trading plan. And this is why a lot of people lose money in financial markets, is because they're trading these low win rate trading strategies. So for example, I'm gonna show you this one thing, right? I went to ChatGPT and I told it to simulate a retail trading strategy that has a 30% win rate, okay? Because once you try to code these retail trading strategies, for example, TGR strategy or whatever, they all have this amount of win rate. They have around 30 to 40% win rate. There is a guy that did it. It's called Thomas. He's blowing up on TikTok recently. He's this aspiring quant. He wants to be a quant in trading, and he programmatically coded these strategies and gave them to a computer, and the computer will tell you like if the strategy, like the win rate, if it's profitable or not. And it all returned like 30% win rate, 29% win rate. Let me give you an example. If I go to excuse me please, if I go to TikTok, this is the guy. He's blowing up on TikTok. He coded TGR strategy, right? And for example, I'm just using TGR as a reference because it's very known in the financial market scene, retail scene, excuse me. And this guy coded his strategy, and you're going to see that it sometimes works. It works, but like over a long period of time, you lose money. And this is the problem. You might get unlucky and be in that period of time where this strategy doesn't perform, because it has a long win rate. It's not gonna win all the time. And this is what keeps you hooked in trading. It works one time, you catch that one big trade one time, you get that one payout, then boom, like the euphoria is over, you start losing, you start like over trading, whatever. But let's just watch the video and let this guy explain what he did.
Your strategy, and you say you've been backtesting it for days and it's working. Well, here's a problem. Here's my programmatic implementation of TJR strategy throughout the month of July, and it's crushing the NASDAQ. Double the returns, more than double the returns. That P&L was accrued over 29 trades throughout the month of July. It took 2 trades today, one this morning, which was very short-lived, and it was a long trade that it closed right at the peak of the morning range, and a short trade that it also won later in the day for this big gain. It's produced 47% returns in the month of July alone. That's insane. If you consider the risk-adjusted returns, that's garbage, but oh my god, 47%. More than 75% of the trades in the month of July were profitable for a 2.609 profit factor. But backtest over 5 years, and how many trades? 800 something, then you're underperforming the NASDAQ.
You see that? So after a long period of time, when you keep using this strategy and you code it into a computer, it loses money over a long period of time. And the human brain doesn't know this. You don't know this. You're only focused on the wins that you get from these retail strategies because they have such a low win rate. and you're getting these payout, maybe you're winning, then once you lose big. And this is like a major problem when it comes to retail traders. They do not know what phase of the market they're in, what's going on, why is their strategy not working anymore. They don't know. They don't have, like, for example, risk parameters. They don't have drawdown limits. They are not systematic enough. They do not know, okay, maybe this strategy stopped working. Me, for example, I have strategies that stopped working. Like, I will use a strategy and I will make money, but like, I'll set a drawdown limit to that strategy. For example, like, if I'll have like this filter, for example, I say if this strategy loses 10%, I'm gonna drop the strategy completely. If he loses 10% over like a period of time, if he loses, let's just say 10% in 2 months, or if he loses 5% in 2 months, something like that, I will drop the strategy completely. That's how I work. And that's how I keep updating my strategies and giving them to a computer and just like getting better at trading. This is the problem with the retail scene. The retail scene, they want to trade easy patterns. They don't want to overthink. They don't want to overcomplicate things. And in my opinion, overcomplicating means mastery. Means you're proficient in what you do. If you don't overcomplicate something and if you don't take it to the next level, you're always gonna be mediocre. You're trading off a phone, you're listening to these influencers, you're losing money. By the way, I'm just saying it how I'm saying it. And that's it. This is today's video. It's gonna be a short-lived one. For example, I simulated the trading strategy. Look, over 1,000 trades with a dynamic RR. That means sometimes you get a 1-to-1, sometimes you get break even, sometimes you get, I don't know. Look, it's good. Look, the first, like, I don't know, maybe like 100 trades, right? It's good, but like over a period of time, the P&L gets close to zero. And this is the problem that happens to a lot of retail traders. They don't understand what's going on. The human biology, your pattern recognition is killing you. You figure out these patterns, you take these easy to understand pattern strategy that you can just like, you can catch these strategies with your own eyes, right? Look, here again, boom. You can catch these strategies with your own eyes, but like the moment they don't work, right? You're kind of cooked, bro. You see what I'm saying? Because they're low win rate, you don't know what you're getting yourself into. You do not know anything. Financial markets, nobody knows anything. So this is today's video. I hope you learned something new from the day. If I have an advice for you as an aspiring new trader, get solid education. Understand financial markets on a high level. Stop trading patterns. And if you trade patterns, trade them on, for example, I'm just saying, for example, quantitative indicators, right? Indicators that are built based on math, not just you drawing stuff on the chart. Do not trade the naked chart. I made a video on this. If you go to my channel, you can watch my content. I also run a Discord, by the way, where I trade and teach people how to trade in a more professional way. If you guys are interested, jump in my Discord. I share stuff for free, and I wish you guys the best. See you guys in the next video.